Good morning, 10:44 a.m. Eastern Standard Time on this Thursday, October 10th, 2024. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So I'm a little under the weather the last couple days. Still wanted to do this update this morning. I don't know how much I'm going to be here this afternoon. My son was sick earlier in the week, and I seem to have caught it. So I might be little sparingly today, but I still wanted to get this analysis out. We had the CPI come out today, which is the Consumer's Price Index. So we had an inflation rate at 2.4% in September, topping expectations. Jobless claims highest since August of 2023. The Consumer Price Index increased a seasonally adjusted 0.2% for the month, putting the annual inflation rate at 2.4%. Both were 0.1 percentage points higher than forecast. Excluding food and energy, core prices rose 0.3% on the month, putting the annual rate at 3.3%. Both core readings also were 0.1 percentage points above forecast. Initial filings for unemployment benefits took an unexpected turn higher, hitting as seasonally adjusted 258,000 for the week ending October 5th, the highest total since August 5th, 2023. And we'll watch this after we go through the analysis. I'm just going to get this set up. Whoops. And we'll get into that after we look at the XRP technical analysis. I'll end it so we can all see what the Consumer Price Index came out as. So XRP right now is up 1.77%, sitting at the 53.35 cent level. It's tough with XRP because we're still in this consolidation, and if we could break up over 53.9 cents, actually about 54 cents now, we should have a run up to 56.45. We talked yesterday when I did my short out, it seemed like we'd have to come up to 54 cents even if bearish, and it came up a little bit higher than that. We're up at like 54.50. So when we're looking at this, it's either the consolidation. If it breaks down, you're looking at 48.99 cents. If it breaks up, you're looking at 56.45. We've got an immediate resistance at 53.98 cents. And we've got a support structure here right at about 52.6 cents. So that's our range right now this morning. If we take a look at Bitcoin, down 47 points, sitting at 60,535. I mean, it looks like we're getting rejected on the pivot point, which is not a good sign. Especially when you're falling down here with Bitcoin. You really want to stay above that pivot point. I mean, that's just the way it goes. Otherwise, you could start this little channel now. And that's unfortunate. If you're trying for the upward momentum. Whoops. Now I'm going to have to put that back. I think it's important, though. Because we had resistance. Come across, we got rejected. So you can really see how this pattern is shaping out. I mean, I can. Kind of looks like that's what's happening. Little fake out to the top side. Hopefully we can get some more volume if we want to push past this area. We got a nice firm rejection here at 61,165. Underneath should be around 58,662. So, and it looks like a bear flag. I'm going to call it what it looks like, a bear flag. Bitcoin looks like a bear flag. Now, could it be a fake out? Sure. But if it was a fake out, you would have expected it to clear 61,165. Well, let me get this. And then you can see if we get rejected here, let's use the pivot layer. I mean, it brings you pretty close to that level. Pretty darn close. So, I mean, that's what it looks like we're looking at here. If this doesn't get some topward momentum here very quickly, it looks like we're going to come back down for Bitcoin. XRP, if Bitcoin comes down like that, I mean, it's tough with XRP. Like I said, it's a very tough, I mean, it's not that it's tough, it's just, does it break out of this region? Right now, we have a gap at 56 cents. The fair value gap. That's why I continue to look at that area. We have not back tested in that area. I think it's, if you're looking at this, the gap right now is at about 55.95, 56 cent area. So, I mean, to me, it always likes to fill those gaps, but that doesn't mean it can't come down to 48.99 cents and then come up and fill that gap. So, That's what we're going to have to deal with today. And we're going to have to see if we can get some positive momentum. We see with Bitcoin what's starting to shape out. XRP is not even close to getting back up to 60 cents. And then if we were to roll back over, we've got 50.6 cents underneath. And if that were to be lost, that's when it gets very slippery. And real turns 50.36, because then you have underneath, if it were to come all the way down, it's towards 42 cents. So we got some work to do for XRP if we want to stay bullish. And I do have a little more favor for XRP, only because in the daily time frame, XRP doesn't look as bad as Bitcoin. It looks like it could be trying to do some kind of reversal candle, but it came up so high now with that push that this really could be a bearish bias. So we really have to pay attention to that 52.64 if it comes down. And then if that breaks, you'd be looking at the 48.99 cent level. And again, if it goes above 53.98, it opens up the door to 56.45. Other than that, though, it doesn't look very bullish as far as the long term. It looks like a gigantic bear flag, even on XRP. Could we invalidate that? We could. But I mean, the way it's set up right now is a massive bear flag. So if it breaks down, I mean, we can see, even if it gets rejected at 56.45, it could come all the way down to 44. If the bear flag rejects here, and then let's just say it does reject at 52.65, I mean, it almost perfectly, no, not almost, it perfectly brings us down to that 40.5 cent level. So that's what it looks like it's starting to set up here. But that's what I have for the analysis, and now you can watch the CPI stuff, just so you can be in the loop. And make sure to hit that like button so YouTube does recommend this update. I would greatly appreciate it. You probably won't see me again today. Tomorrow, hopefully I'll be feeling better. But I still wanted to do an update today, just so, you know, everybody could stay in the loop. But the CPI came out today. That seasonally adjusted 258,000 for the week ending in October 5th for unemployment filings. But we're going to listen to what they have to say here in about, 5 seconds here.
Now you get your game day delivered with Little Caesars.
Pizza.
Welcome back to Swap Box. Rick Santelli here, live at CME HQ with the breaking news of the morning. Big news. CPI, the big inflation number for September, hitting the wires. Expected to see a headline up 0.1%, comes in up 0.2%. If you strip out food and energy, up 0.3%, which of course equals our last look. To find a bigger number, you have to go back to March when it was up 0.4. But do keep in mind, June was up 0.1, July was up 0.2. So this has been running a bit on the warm side. Now, if we look at year-over-year numbers, 2.4, hotter than expected, but 0.1 cooler than the rear view mirror, and it continues the streak of these numbers year over year on the non-core moving lower. And if you look at 2.4, just like 2.5, it comps back to February of 2021. Now, if we look at what's going on with respect to year over year core, which starts to get into some very important numbers here, this one's warm as well. 3.3, 0.1 warmer than expected, 0.1 warmer than the rear view mirror. It equals June, but of course the last 2 months have been 3.2. Now, finally, if we look at the indexes, and I think the indexes are very important, the index for the headline number, 315.301, another all-time high. If you look at the core, 320.76, another all-time high. Now, let's look at initial jobless claims. Some surprises here. 258,000. That's going to put a little potential downward pressure on interest rates. The last time we had a number in that category, you're looking at June of 23, where it was 261,000. And finally, yes, it's the 18th consecutive month over 1.8 million on continuing claims. And just for the record, the last time we were above 1.9 million was November of 21. We come in today at 1,861,000. That would be the warmest going back to the third week in July. So to summarize, it certainly seems as though the inflation numbers pretty much across the board were either as expected on one count, but pretty much warmer on all counts. And initial jobless claims definitely had a little pop there. So before the number, we were hovering right around 404 in a 2-year. We have dropped rather dramatically. We're now briefly under 4%. But if you look at the longer dated side, it moved from about 408 to basically 406. So it moved down as well. What's notable about 10-year is that yesterday was the 6th consecutive session that the high yield was higher than the previous day's high yield, all consecutive. So we want to monitor today, and today it already happened. We have traded above yesterday's high yield. We have high yield today of 410. The high yield yesterday was a whisker under 408. That means 7 in a row. Why do I bring this up every day? If you're a technician, that's a real momentum builder to higher yields, lower prices. Becky, back to you.
And Rick, what about that auction sale you were pointing out yesterday? You made the interesting point that we'd see if traders are more concerned about locking in some of the gains maybe they've seen at this point, or maybe more concerned about that upward trend continuing.
Yes, I think what we are going to see is, and we do have an auction today, reopen 30s, 22 billion. But I think we learned a lot over the last couple of auctions. It certainly seems as though certain categories have gotten a bit excited. Yesterday, it was all about indirect bidders. For the 3-year, it was about direct bidders. These categories show me that there is a little bit of nervousness out there regarding the U.S. economy, how the Fed has anticipated how this rate cycle will go. And yes, I think there has been some profit taking, but I do think there's more of a reluctance to fade the notion that long duration rates like 10s, 20s, 30s, even 7s to some extent are going to be a bit more excited. Many believe it's the political season, and that subset believes it's all about debt and deficits, and how neither candidate seems too worried about trying to overspend to get more votes.